Hello everyone, this is Jennifer. In this video we're going to look into the liquidity ratio. So the liquidity ratio is also known as working capital ratio or short-term solvency ratio. So there are three liquidity ratio: current ratio, liquid ratio and absolute liquid ratio. So why this liquidity ratio is found? It basically tells how much of adequate working capital does the company have in order to meet its short-term requirements. So the current ratio, first under the liquidity ratio, it acts as an indicator of the firm's commitment to meet its short-term liabilities. So the formula is current assets divided by current liabilities. So current assets divided by current liabilities. In current assets, you take all the assets which can be converted into cash within a short span of time. In current liabilities, you take all the current liabilities which can be payable within a short span of time. So the ideal current ratio is 2:1, wherein the current asset is more than your current liabilities. Liquidity ratio, so your current asset is 2 and your current liability is 1, wherein your current asset is more than your current liabilities. Liquidity ratio, the ratio is also termed as asset test ratio or the quick ratio. So in this, the formula is liquid assets divided by current liabilities. So in liquid assets, we do not consider the prepaid expenses and stock. Why? Because it takes quite some time to convert into cash, so which are a little more liquid in nature, we consider it. So liquid assets divided by current liabilities. Your third formula is absolute liquidity ratio. So this is a much more quick ratio, wherein which are absolute liquid in nature, which can easily be converted into cash, and only the cash and bank balances are considered in this. So the formula is cash and bank balances plus short-term securities divided by current liabilities minus any bank overdraft. So your first question, following is the balance sheet of the company. You have your liability side and you have your asset side. In the question, they have told us to calculate current ratio, liquid ratio and absolute liquid ratio. So you consider only your current assets and current liabilities. Look into your question and see what are your current liabilities. In the liability side, we have sundry creditors, bank overdraft and provision for taxation, which is your current liabilities. In your asset side, we have stock, sundry debtors, advances, bank balances and cash in hand. So let us start with the solution part. So current ratio, formula is current assets divided by current liabilities. So your current asset have stock, sundry debtors, advances, bank balances, cash in hand. So total of your current asset is 1,35,000. In your current liabilities, you have sundry creditors, bank overdraft, provision for taxation, which is 1 lakh. So your current ratio is current asset divided by current liabilities. 1,35,000 divided by 1 lakh, which is 1.35. Your liquid ratio is liquid assets divided by current liability. So in liquid assets, what all we do not consider is, we do not consider stock and any prepaid expenses. So we do not consider the stock. So the rest four will be considered. So sundry debtors 49,000, advances 10,000, bank balance 20,000 and cash in hand 16,000. Total you get 95,000. Here they have not included plus sundry debtors, don't get confused, but they have added the amount. So your liquid ratio is 95,000 divided by 1 lakh, which is 0.19, 0.95. How did you get 1 lakh? Your current liabilities. So your third ratio is absolute liquid ratio, your cash plus bank plus short-term securities divided by current liabilities minus bank overdraft. So what is your bank balance? So your bank balance is 20,000 plus your advances, which is 10,000, and cash in hand, which is 16,000. So total you get up to 46,000. You do not consider sundry debtors here for your third ratio. So 46,000 divided by 1 lakh they have given in, we have calculated as current liability. So 1 lakh divided by bank overdraft, which is 30,000, you get 70,000 as your amount. So 46,000 divided by 70,000, 0.66 is your answer. So moving on to your next question, which is calculate current ratio and quick ratio. Sundry debtors 4 lakh. They have told us to calculate current ratio and quick ratio, and they have given certain items. Sundry debtors is what? It's a asset, current asset. Prepaid expenses, current asset. Debentures, current, it's a long term liability, so you do not consider. Stock, current asset. Bills payable, current asset, current liabilities. Marketable securities, current assets. Sundry creditors, current liabilities. Cash, current asset. Expenses payable is your current liability. So you take your current asset and current liabilities respectively. So in your current asset you have sundry debtors, prepaid expenses, stock, marketable securities and cash. Total you get the amount to be 8 lakh. Under current liabilities you have bills payable, sundry creditors, expenses payable. So total you get up to 4 lakhs. So your current ratio is current assets divided by current liabilities. 8 lakh divided by 4 lakh, which is 2 is to 1. So your quick ratio is supposed to calculate again. Why? Because in current asset we have included stock and prepaid expenses. So you will minus that in order to calculate your quick assets. So current assets minus stock and minus prepaid expenses. Total of your current asset is 8 lakhs minus stock is 1,60,000 minus prepaid expenses 40,000. So total you get 6 lakhs. 6 lakhs divided by a current liability, which is 4 lakh. So your ratio is 1.5. So your next question, current assets of the company are 5 lakhs. Current ratio is equal to 2 is to 5 is to 1 and quick ratio is 1 is to 1. Calculate the value of current liabilities, liquid assets and stock. So this is a kind of indirect question wherein they have given the ratio and they have telling us to calculate the amounts of items. So your current ratio is equal to current assets divided by current liabilities. Current ratio is given, current assets is given. So can we find out the current liabilities? Yes, with the help of current ratio. So 2.5, it is not 2 is to 5, it is 2.5 divided by 1. So your current ratio they have given 2.5 is to 1. So you'll put it in this form. 2.5 divided by 1 is to current assets they have given us 5 lakhs divided by current liabilities. So you cross multiply, current liabilities equal to 5 lakhs into 1 by 2.5. So you get your current liabilities to be 2 lakhs. And what have they told us to calculate? They have told us to calculate liquid assets and stock. Liquid assets and stock will come into picture in your quick ratio sometimes. So your quick ratio formula is quick ratio divided is equal to quick assets divided by current liabilities. Your quick ratio they have given in the question as 1 is to 1. So you'll put it up in this form, 1 divided by 1, which is equal to quick assets we do not know. So current liabilities 2 lakh which we found out in. So when you cross multiply you get your quick assets to be 2 lakhs. So now we can easily find out our stock. Why? Because current assets minus your quick assets is always stock. Why? Because in quick assets we do not include stock and prepaid expenses. So stock is equal to current assets minus quick assets. 5 lakhs minus 2 lakhs, which is equal to 3 lakhs is your stock. So your next question, current liabilities of the company is 1,20,000. Its current ratio is 3 and liquid ratio is 0.90. Calculate the amount of current assets, liquid assets and inventories. So current ratio they have given 3. So what will you do first? Take your current ratio formula. Current liabilities they have given. So you have both. You are supposed to find out your current asset. You can cross multiply it and find it out. So current ratio is equal to current assets divided by current liabilities. The ratio that they have given is 3 is to 1. So 3 by 1 is equal to current assets divided by current liabilities, which is 1,20,000. If we cross multiply you get your current assets to be 3,60,000. Now next what they have told us to find out is you are supposed to find out the liquid assets and inventories. So inventory is nothing but your stock, the same way how we found out the last question. So liquid ratio is liquid assets divided by current liabilities, which is 0.90 divided by 1 is equal to liquid assets divided by 1,20,000, which we have current liabilities amount. Cross multiply, you get your liquid assets to be 1,08,000. So stock can be found out by current assets minus liquid assets, which is 3,60,000 minus 1,08,000, which is 2,52,000. So your next question is, current ratio of a company is 3:1. Working capital is rupees 30,000. Calculate the amount of current assets and current liabilities. So working capital we do not have. Working capital we have, and we have the current ratio given. We are supposed to find out the current assets and current liabilities. Working capital formula is what? Current assets minus current liabilities. Why? It shows the difference between your current assets and current liabilities. So 30,000 they have given. Current assets minus current liabilities, nothing but your ratio, 3:1. So 3 minus 1, so 30,000 is equal to 2. So we understood by this that when current asset is 3, working capital is 2. And when current asset is, we don't know. Okay, we don't know when what is current asset. The working capital is 30,000. Okay, so I put it up in a very simple way. So when working capital is 2, we consider current assets to be 3 because it is given in the equation. Okay, when working capital is 30,000, which we have, we do not know what is your current asset. So cross multiply to find out your current asset. So you get 45,000 as your current asset. So current ratio is what? Current assets divided by current liabilities. We have current asset, we have current ratio. Can we find out current liabilities? Yes. So your current liability is for 15,000, which is by cross multiplying. So your next question, a business has a current ratio of 3:1 and quick ratio of 1.2:1. The working capital is 1,80,000. Calculate the total current assets, current liabilities and value of stock. Okay. So in this question also, what have they given? The current ratio they have given, the quick ratio they have given, the working capital they have given. They are telling us to find out current assets, current liabilities and stock. The same method we will follow. Wherein working capital is what? Current assets minus current liabilities. The current ratio is 3:1. So 1,80,000 is equal to 3 minus 1. 1,80,000 is equal to 2. So when working capital is 2, your current asset is 3. When working capital, which is given as 1,80,000, we do not know what is your current asset. Cross multiply. You get to know your current assets to be 2,70,000. So you have your current ratio, you're supposed to find out your current liabilities, and you have your current assets. So cross multiply, you get your current liabilities to be 90,000 with the help of formula. Now we are supposed to find out your quick assets, which they have asked us to find out in the question. They have given quick ratio. We do not have quick assets, but we have current liabilities. So use your quick ratio formula. Quick ratio is equal to quick assets divided by current liabilities. 1.2 divided by 1 is equal to quick assets divided by 90,000. So quick asset is equal to 1,88,000. 1,08,000 is your quick ratio. How do we get 90,000 into 1.2 divided by 1, which is equal to 1,08,000. Stock, now they have told us to find out the stock also. Stock is equal to current assets minus your quick assets. So 2,70,000 minus 1,08,000. 1,62,000 is your answer. So next question, they have given the current ratio is 3.5:1 and quick ratio is 1.5:1. The excess of current assets over quick asset is represented as stock, meaning to tell current assets minus quick asset is what? Considered to be a stock, which is 60,000. Calculate the current assets and current liabilities. They have given stock to be 60,000, so current assets minus quick asset. So your current ratio is what? 3.5. In your quick ratio, 1.5. So current asset is 3.5, quick asset is 1.5. So 60,000 is equal to 3.5 minus 1.5 is equal to 2. So 60,000 is equal to 2, which is nothing but your difference in your assets, which is considered to be a stock. So when stock is 2 as a ratio, 1.5 is your quick asset. When stock is 60,000, what is your quick asset? Okay. So quick asset is equal to cross multiply. You get 45,000 as your answer. So current asset is what? Quick asset plus stock. Why? Because it's just the reverse of your formula. Stock is what? Current assets minus quick assets. So when you put this side, to find out your unknown figure as current asset, you get current asset is equal to quick assets plus stock. So 45,000 plus 60,000 is equal to 1,05,000. Current ratio is equal to current assets divided by current liabilities. 3.5 divided by 1 is equal to 1,05,000 divided by current liabilities. Therefore, your current liabilities is equal to 1,05,000 into 1 by 3.5. So you get your answer to be 30,000.